Hello traders and welcome to another video review. Today is Monday, September 15th, 2025. Let's take a look what do we have in the economic calendar for today. Asian session were full of the data releases in form of the Chinese data mostly. So what do we have here from China? Industrial production down from 5.7 to 5.2, fixed asset investment down from 1.6 to 0.5. Industrial production year to date is down from 6.3 to 6.2, and unemployment rate is up from 5.2 to 5.3. Very poor data from China these days. So let's see how the market will react later on. PPI from Switzerland down from minus 0.2 to minus 0.6. We are waiting for the CPI data from Poland. The data are scheduled for release at 10 o'clock. At 10 o'clock as well we got data from Turkey, budget balance, and at 11 o'clock we got data from the Eurozone in form of the trade balance. At 1:30 we got ECB Schnabel to give a speech, and then we enter the US session. At 2:30 we got New York Empire State Manufacturing Index scheduled for release, and then the Canadian data are scheduled for release. At the same time, manufacturing sales and wholesale sales. So not really interesting US session, and quite good. London session ahead of us. The most important, I guess, the most important part of the session for today was obviously the Chinese session with Chinese data. So we will take a look how the China-related currencies will had reacted already. That was released like 5 hours, over 5 hours ago. All right, without any further ado, let's talk about the charts. We start with euro dollar. Euro dollar keep respecting the channel line. The local dips were towards the 100 periods moving average and towards the level of 1.1662, and then dips are being bought back up as the US dollar going back towards the middle of the range. You can see that the range can be of the channel can be ranged a little bit lower these days, and we got two perfect hits here with that deep buying action, right? So right now we are back above the 1.1731, local high 1.1751. So any breakout above 1.1751 opens the road towards the 1.1781. This is the technical resistance, obviously. The ultimate target is still the level of 1.1851, 100 pips above the current swing high. And with this kind of a momentum, 58 points, the outlook looks quite good for the bulls, as long as the dips are being bought back up roughly around the lower channel line area. The outlook remains bullish. So the euro dollar should be going higher. British pound is again testing the swing high at 1.3593 these days, with the nice bounce on the RSI from the level of 50 during the first dip and during the second dip. Now momentum is 63 points, strong positive momentum. We should see breakout higher. So if we break higher, where do we actually go? Remember that this break is the high for the wave B, 1.3587. Next target eventually is located at 1.3787. This is the swing high from the July 1st, 2025. So that outlook looks quite good as well. Looks quite bullish. Only if we break below 100 periods moving average and then test this to technical support levels 1.3457, 1.3414, we might change the current outlook to more bearish. For now, bulls are in charge of the market. And US dollar versus the Japanese yen doing completely nothing, back to the middle of the range, back to the 100 periods moving average, local high 148.21, reversal lower. And that's why we are still waiting for a breakout to the upside on this market. Let's take a look how does the commodity related pairs reacted to the poor Chinese data. On the 4-hour time frame chart of the Australian dollar, we can see surge to the upside towards the last week swing high located at 6,671 level. So that's the level right here. There you go. So that's the technical resistance, and we can see a steady trend, a steady uptrend. Local high, local low, higher low, higher high, and higher low. So we got this sequence of the consecutive higher highs and higher lows. The same situation is on the RSI. So we are looking at the trending market, at least a little bit trending market. Again, we are above 100 periods moving average on the daily time frame chart. This part of the chart is looking quite bullish. Very nice situation. However, only in 3 ways so far. So if we apply our Fibonacci, Elliott wave cycles, so we might be now in wave 3. And obviously this wave 3 might be extended even higher. So that's the situation on the Australian dollar, looking very bullish. And the New Zealand dollar is on a daily time frame chart is testing the 100 periods moving average, 5,952, with a quite strong and positive momentum. We just got the breakout above the trend line. As you can see here, we got the breakout above the trend line. There is a test of this trend line breakout. Let me just zoom in. There you go. We got the series of the movement towards the trend line, and then we got the breakout towards 100 periods moving average test. First test, second test of the trend line breakout. Let me just make it a little bit better visible. There you go. And then the market is ready to go higher. Where do we go then? We should go towards the level of 5,000, yes, 5,990. This is the technical resistance, and then eventually we can go as high as the next target at 6,054. So that's the next level for the New Zealand dollar. All right, and last but not least, let's take a look at the Bitcoin. What is Bitcoin doing these days? So we got this movement towards the technical resistance over the weekend. However, as you can see, as indicated by my blue arrow, this is the key level to the upside, and it has not been violated just yet. Local high 116,809. Nevertheless, during the consolidation here, the momentum dropped significantly to the level of 51 points only. It didn't broke excuse me, it didn't broke below the level of 50 yet. However, it doesn't actually look good for the bulls these days. So we should see more downside to come if the technical resistance is yet again rejected, basically, right? So please keep an eye on these 2 levels here that we always have on our chart. Those levels are the key for the upside. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.